GKFX Prime presents the Market Analysis Webinar.
Hello everybody, welcome to another edition of the weekly webinar. It was a pretty dramatic week in markets. We'll have a look at some of those moves very shortly and what they could mean moving forward. Of course, it was the US election. It was a lot tighter than expected. We now have a president-elect, but Donald Trump has not yet conceded at the time of recording this webinar, so still interesting times ahead. Particularly some notable moves in the dollar, stock markets pushing back into record highs, some big breakouts in gold and Bitcoin, so some really, some potentially more trending markets happening now that this US election is behind us to some extent. And of course that's good for directional trading if that's what you do. So I'm going to cover these major asset classes as I always do. So that's the forex market. There's some commodities. That's a bit of crypto and indices too. If there is something else you want us to cover in these webinars, drop us a comment. Speak to your account manager. More than happy to accommodate. If you're just liking the videos and get some benefit, please click that like button. It really does help. Right, let's get started here. So we'll begin with the euro-dollar currency pair. So this is our 4-hour chart. Let me expand on the situation a little bit. So big bullish rally, bearish consolidation channel, which we've had in place for a little while, but we've double bottom, but we basically found support twice at 116. And this was last week's really powerful rally where this was obviously Tuesday, where there was a lot of uncertainty. We dropped heavily, but we rebounded, and then Thursday through Friday, Wednesday, Thursday, Friday, we rallied up pretty strongly. And as of the start of the new week, we're pushing into this 119 level. So if we understand this channel to be a bull flag, then naturally we're going to see another up move similar to this on the other side. So if I look at the weekly chart, if we're looking at minimum this as the flagpole, of course it could be this, but let's set our expectations realistically. We're looking at a push up above 125 and into the highest levels since back here in 2018. So potentially a very bullish move in the euro undertaking here. You can see on the weekly chart that it's been very choppy. We've been going sideways, but this last week did engulf the prior 1, 2, 3, 4, 5 weeks. So that's generally a pretty strong bullish signal when you get one week that engulfs that many previous weeks. So these weeks were obviously weeks of consolidation. I mean, I'm saying that it actually goes further, doesn't it? 6, and then, well, okay, so this week, then this is when we have some higher highs. So you have 5, 6 weeks. You get the same. Just at the point is that we've had a big bullish move that's engulfed those prior moves. We've come out of the overbought. We've consolidated, and maybe we're getting ready for the next big push higher. So that's the bullish thesis, obviously. More short term, we're running into this big 119 handle that actually, if I zoom out a bit, I think we can probably see it better, that it's been acting as resistance in this area. Maybe better to draw a sort of I mean, 119 has been like this. We've banged into it a few times. There's certainly a potential that we roll over just specifically from 119. Then on a broader level, if we go back to the start of this consolidation, the high's up at 120. We only got there once, but this whole kind of zone of resistance through here from these first set of peaks really starts at 119 and goes up to that peak above 120. So we're entering again this longer term kind of supply area, if you like. And while the price action from last week looked very bullish, and it looks like probably we're breaking out of this pennant and above this longer term downtrend line that we've talked about many times, Still some short-term resistance. So even if you're not looking to sell it right down to 116, I think that would probably be a stretch to think that we're kind of double topping here. Everything else points quite bullishly. But nonetheless, there could well, if you see some sell signals in this area, it is a well-defined area of overhead supply, and you'd certainly be within your rights to be selling up there, even though the kind of short-term momentum has been pretty strong and it looks like we're breaking out. You can't go up in a straight line. You need pullbacks, and within this kind of zone is probably where it's going to happen. Now, as you might imagine, it's a similar story for sterling, just not quite as strong. So this is our 4-hour chart. Let's pull out our daily for a second. We've basically held quite neatly onto this rising trend line. 1, 2, 3, 4 tests now, and so that's defining our uptrend. And so even though we had this big down leg, the bearish thesis, something I've pointed to a couple of times, is that it's kind of something more like this, where that was the big down leg, consolidation up, and then big leg lower. So kind of like this was the original. Hold on. Put the UN back in place. No. Oh, for some reason this one just doesn't want to click. There we go. Did it higher up, and yeah, okay, it's not straight, but you get the point. Let's move it down here. Something like this would be the bearish scenario. This doesn't look like the central scenario at the moment to me. Then we get a drop down to 120 again, and this low, but you can see how it's quite symmetrical that would be the case. So if we fail around this 3150, we're heading up into, we're just shy of 132 at the time of recording. So if we fail in this region, at the top of this channel, up above 132, maybe we get as far as 133, would that be the top of the channel? 132.50 rather. So we're at 132, between 132 and 132.50. Potentially this is upper channel resistance, and we could set up the beginnings of this big bearish scenario. But again, it doesn't really feel like it's probably the case at this stage. It looks like we're holding a bullish trend. We're above the 50-day moving average. A couple of times we tried to sell off down through it. It didn't work. We're back above it, and we're breaking out above the old high as we speak. So it looks actually quite constructive, and probably this is not the scenario. The number one scenario, actually a more bullish outlook, is probably more likely. And you can see here that yeah, we're basically pushing above this resistance area here, and it looks like we're going up to test. And the other point being that through this big steep drop here we had down from just shy of 135, there wasn't much pause for breath. So actually, once we get above these, we've stalled a couple of times here. But if this actually can push solidly higher, then there isn't really much prior support and resistance to stop us. But bigger picture, I wanted to point out is that, okay, this is the potential long-term double bottom scenario, and here is 134, but it's really sort of 134 to 135 being the big number, which hasn't been hit yet. But I've drawn this in before, but just to remind ourselves what we're kind of shooting for here is that this is the kind of big area that we're trying to break above, and so at the moment we're just trying to get up to this. We had that kind of sharp correction down from 135, just shy of 135, and we're trying to get back up to it on a shorter term basis. We're holding the rising trend line, but after that, long-term traders, what do they have in mind? Well, a break through this 134, 135 up, after a long basing period, really since Brexit, you know, Brexit, bounce, and then back to the lows again, big basing period. That could be the big breakout. So that's kind of the possibility, this break of 134, that you can kind of have in the back of your mind that maybe the market is at least going to try and challenge again, and that would be another reason to think probably on the short-term basis, you know, that's why we're going to push into the top side. All right. Dollar yen, probably the most interesting move of the week, because we've finally taken out this big 104 level. So I even have to zoom out my chart a bit to sort of show you that. Why don't I move this down to here? And it sort of shows you how long we've been hugging onto this 104 basically, and just in the last two instances we're below this zone, but we've managed to hold 104 a few times, and now we're below it. We've rebounded just above 103, but this is the lowest. You can see we're on the weekly chart right now. It's the lowest weekly close since in 2 years. So it's a 2-year weekly closing low. Now obviously we had these two massive spikes on previous occasions above, which took the price when it was making a dip through 104. Massive buying came in from lower levels, admittedly, than we've got to so far, but big buying came in and pushed us back above 104. So that could happen again, and the general theory goes that this was actually a verbal intervention from the Bank of Japan. Actually, the Bank of Japan's they've been talking slightly differently. They're trying to talk up the economy a little bit more. I read a comment from Japan's finance minister calling Japan's economy currently in a boom. Obviously, it was a big bust in Q2, so now it's, you know, it's probably correct to say the extent of the recovery is so large. It's such a big bounce from such a big crash that yeah, you can kind of call it a boom. And the Nikkei stock index is up at its highest levels in multiple years. Let's actually have a look at that while we're going to jump around a bit here while we're talking about Japan. Let's have a look at that. Here you can see the big breakout happening in the Nikkei. You know, this is our weekly chart for our benefits. We don't have to go much beyond that. And you can see that this is the huge resistance that as of this week, corresponding with the so-called boom in Japan's economy. The Nikkei is breaking out to yeah, I think the highest since '98. And so this is a big powerful move happening in Japanese equities, and interestingly it's happening at the same time that the yen has strengthened, which is often not the case, because there's a lot of exporters in Japan. They tend to prefer a weaker yen, but actually you can see that dollar yen was dropping, and the Nikkei here breaking out. Anyway, that's just a by the by. So I think what we can conclude from this is that we've broken a major level. If we go down to our 4-hour chart, you know, a bounce back up towards 104 would be ideal, but I'm not convinced we haven't even got to 103 yet. So I'm not convinced that you know, you can see this bounce was sold off pretty heavily, and you can see that we've just moved up to test 103.50 again. And I'm not sure we're going to get much beyond 103.50. Between 103.50 and 104 offers quite an interesting zone of opportunity to catch a bounce on the idea that this big leg lower, which took us through a major level at 104, will continue down. Obviously a close for the day and certainly the week back through 104, and maybe we can start calling this a false breakdown, but so far it looks alright in dollar yen. Okay, moving over to the Aussie. So as you might imagine, dollar yen breaking down, the Aussie dollar's breaking up. This was our triangle pattern we had in place. I mean, this is all on the daily chart. This all looks quite clean. holding the support, series of lower lows matching through a trend line, 1, 2, 3, 4, fifth time break. I've mentioned that in these webinars quite a few times. Oftentimes in currency markets, it's fifth time lucky of a break of a level, and if it has been tested 4 times previously, it means it's like a significant or strong level, and when the break happens, it has a bit more significance. And so that's what's happening. We're breaking higher, but when we jump down to the 4-hour chart, you can see that it was hardly easy trading at this point. Obviously that was happening during the election, but you can see actually this would have been difficult to trade. Short-term trading was definitely good in terms of large price moves, but in terms of kind of directional trading, a little bit trickier. But you can see ultimately the market kind of leveled out. So this was the resistance. Having based out at the 0.70 level that we mentioned last week, there was a big rally up, took out the old high. Then we had this craziness, but it kind of resettled itself. It restabilized above the moving average, got back through the trend line again on this close, moved higher, tested the old highs as you kind of would expect in more like normal trading conditions. So a break higher, a retest of the level, and then moved up to the next high, broke above that, retested, and now we're pushing up again. So it's a very nice bullish looking scenario at the moment, and we're basically through this level, and while this short-term level holds, we're looking for higher prices. Well, if we drop back through this level again, then maybe we have to re-challenge this, maybe we get a deeper correction. And then you can see on a daily basis we've got our next series of highs through here, and then just shy of 0.74 where we topped out before. So even if we say that, well, this triangle is not particularly valid, although it looks very valid, even if we just say that we're in a sideways range, still from where we currently are, if we say we're at 0.72, just shy of 73, the top of the range is at 74, so it's still 100 pips to test the top of the range from where we currently stand. And if we're talking about height of the triangle, again in terms of a kind of using the height of the pattern as an objective, then we're actually looking higher. We're looking at towards, I don't know why I'm doing it from that low. The breakout was here. So the breakout already happened, and that neatly takes us up to 75. Alright, not bad. So moving away from Forex now onto gold, where there's been some big moves taking place. Let's look at our daily chart. Again, a triangle, a longer term one than the Aussie. And again, we could still just be in a sideways consolidation zone. In fact, we are still in a sideways consolidation zone, but there are some hints, both from the declining trend line, which is broken. This time it's 1, 2, 3, 4, 5 arguably tests, with a little small drop that failed, with a long leg. That was a good clue, and then big breakout come last week. But you can see here there's been a long basing period in momentum. Price has been basing, trudging lower but holding on to the lows, and then looks like we're breaking out. So yes, we're still below 2000, which you could sort of say is maybe the top of the range, and obviously the record highs up here, but it does seem like this was the shape of the consolidation and we're pushing out to the top side. Why is that? Well, obviously it looks like we've probably got a divided government in the US, and so we're going to see, but the election is over, so now the election's over and Biden's in, we most likely are going to get some sort of stimulus package. Involves more debt in the US, puts the dollar at more risk, but also because it's a divided government, not so much chance of a absolutely gigantic fiscal package, and so actually there's a belief that probably the economy is not strong enough to hold up by itself. At least that's the thought amongst the central bankers, and that they'll have to do something again. And so the ECB and the Bank of England already added to its quantitative easing. The ECB said they will in December. So the kind of last shoe to drop almost is the Fed, and whether they will start, more strongly hinting at some action probably in December too. More quantitative easing most likely, just to make up for the fact there isn't going to be as much fiscal stimulus under a divided government of Republicans in the Senate and Joe Biden in the White House. All right. Okay, so moving on from there. Oil still in its trading range, so also technically quite nice. Came to the old support down here. Bullish engulfing off the little false break through the lows. Bullish engulfing took us back to the old support. Rallied up to these lows through here, pulled back from there alongside the 50-day moving average, and then stabilized back at the same support again. So it's respecting the various levels that we sort of expect it to test. And if you are just trading between levels here, then actually oil's working quite well. It's not directional, but it's kind of working quite well between the levels. So at the moment, obviously the action is bullish. This was a little short-term peak that we put in. This was the bullish engulfing candle. Obviously, we're on a shorter-term chart, but this was the 4-hour-ish. The four 4-hour candles that made up the daily chart. Little small correction, rallied up again, and where that correction started, that's been holding the price so far. And so while we're above there, we look bullish, and the expectations for a test to the top of the range. Back through there, then we're looking to the next downside level, which is back down here near 34. Bitcoin, again, one of the more exciting moves of the week. This is the 4-hour chart. We talked about this rounding bottom last week. You can't draw a rounded line, but we've drawn these sort of this idea that the lows were sort of rounding up, and then actually it was sort of accelerating up to the upside, and we just had to get through that 13,800 resistance that we'd reached, and certainly it happened. I mean, we barely had a down day in this, obviously just a down period rather, and we just fired up over the space of 36 hours or so. We just had a massive rally that carried us up to just shy of 16,000. And this is a pretty standard correction. You can see better on the hourly chart even. That rally up, correction. I mean, you would expect this rally to carry on to the top side. But one interesting thing I did note is that the 38.2% Fibonacci comes in quite neatly at 1500. So yes, we have been actually holding these initial lows pretty well. You could even base it on that high. Even it's kind of that sort of thing, right? This is the basis that we've been holding on to that resistance as support, except a little false break there. But if we do break down first, then it actually does give us lower prices, with the idea that this is very bullish, but we don't know how big the correction will be. So either we break out the triangle and we just go bullish again up through 16,000, or we have to correct further, and just notably 15,000 lines up with 38.2. The 50% lines up with this correction that we had here. So somewhere in this vicinity, if we do get a drop lower again, has its opportunities, I would suggest. But overall, I would say looking pretty bullish in Bitcoin. This is our weekly chart, and you can see we're obviously powered through that 13,800 level, and we're up at the highest. On a monthly basis, which doesn't look so good because we just don't have enough of them, but you can see it's the highest monthly close that we've had, and we obviously haven't closed out this month by any stretch yet. We're only in the first innings of this month, but as it stands, we're the highest for the month since since the month of the record high. And how does it stand on weeks? Yeah, well, it's still our highest weekly close certainly since January 2018. And last but not least, the stock market, the S&P 500. Well, last week we were asking a question. We certainly didn't say we knew. Was it a double top? So we had one top, drop, second top, down, and then stalled at the support. And we said, well, is the price going to break? You know, if the price breaks through this support, then we're looking at a measured move lower, and we're back down through into sort of 2,800 territory. Well, obviously that wasn't the case. We got a nice little long-tailed wick directly off the support level that we'd drawn. Then we got a little bullish engulfing the following day, and then you can see on the short-term chart that we had put in a peak, managed to rally above there, got a retest, got a couple of retests. In fact, this was obviously the chop around the election. It wasn't quite as crazy as the forex markets were. Pretty much stabilized at that resistance quite neatly. Maybe some people were using closing prices, and so it was a bit more like that. But you can see the general idea. It held it and rallied up to the next area of resistance. Little false break, but pulled back, rallied up, retested, and now as of today, we're gapping up through that previous peak, and we're up here past our peak from October, and so we're testing the, what was it, June peak, I believe. Oh no, what am I talking about? September. The September highs up here, and so it looks like we're breaking out. We're not above these high levels yet. As I mentioned, it's not all completely done and dusted on the election, although it looks like it will be probably soon. Just interesting, and still just a bit tempting to look at this long-term trend line here and see the fact that we've kind of failed at this trend line. 1, 2, and then a couple of times here. It's not obviously perfect. It's a very long-term phenomenon. But do we rally up a bit through again, make a new record high, and then stall out, or can we just not even get through the highs and roll over again? It doesn't look like it, but based on, if I zoom in a bit, you can see just the extent of the bullishness of last week's candle. That looks very strong. Looks like we're breaking out to the top side. But just look out for the weakness and just bear this long-term picture in mind. It might actually be that we're not as strong as we appear from this 1 week. Actually, we're bumping into some major overhead supply, given all the difficulties and uncertainties out there. Maybe we're setting up for some uncertainty going into the end of the year. But let's see. Yeah, the picture looks bullish. Obviously, we're close to record highs. That's never that can't be anything but bullish. But just keep that potential longer term kind of dynamic resistance through these highs in mind. Maybe we're setting up to roll over again, and maybe we'll even get a triple top and this drop down to below 3,000. Maybe it actually does come to fruition. But let's see. Alright, that's it. Thank you very much for watching, everyone. Good luck trading this week. And thank you again for watching. And of course, if you do enjoy these and want to get some, get the benefit, and you would like to see them on a regular basis, please make sure to click that subscribe button. Thank you, everyone.